Hey guys, Danny Kroll from Preferred Mortgages. I'm here to talk today about the differences between variable rate and fixed rate mortgages. So generally there's two different types of mortgages that are available in Canada. You also can do a blend of the fixed and the variable, but I'm just going to talk about the differences. And as I mentioned, you could combine the both if for some reason you have trouble deciding or your individual situation makes sense for you to do a blend of say half and half or 2/3 or 1/3 between variable and fixed rate mortgages. So a fixed rate mortgage is where you have during the term that you are signing your mortgage with, during that term, if you had a fixed rate mortgage, the interest rate would remain the same regardless of what the Bank of Canada does. If the Bank of Canada raises interest rates, if you're in a fixed rate mortgage, your rate does not increase. Same thing if it decreases. If the Bank of Canada lowers the rate, the interest rate, again, it does not affect your individual payments. If you were to do a variable rate mortgage, then as the Bank of Canada raises and lowers interest rates, or as interest rates fluctuate, that increases or decreases the amount of interest that you are charged and your payments towards your mortgage. So those are the main differences in how it conveys to the clients. The variable rate mortgages, generally speaking, because you don't have that certainty as well as you don't have that certainty of how much your payment is going to be each month over the next few years, you do actually get some savings involved with that. So generally speaking, variable rate interest mortgages have a lower interest rate associated with them. Fixed rate mortgage, as interest rates change, it does not affect the interest on your mortgage, and you do generally pay a little bit higher interest rate with that, but you do get that added peace of mind that the Bank of Canada is not going to surprise you with an interest rate increase that affects your personal monthly expenses. So those are some of the main differences. When you apply for a mortgage, because a variable rate mortgage could go up, the interest rate could increase. The government requires that the homeowner must qualify. So when you're applying for a mortgage, there's certain parameters that they look at, certain calculations that are done to make sure that you can afford the mortgage. So when you're doing a fixed rate mortgage, you would use the rate that you are locking in for those calculations to make sure that that you can afford it. In a variable rate mortgage, due to the recent rule changes, you actually have to qualify at a much higher rate. So right now, you could get a variable rate mortgage just over 2%. However, to qualify, you would need to qualify at just under 5%, approximately 4.7% is the calculations that they would use. So if you have a strong income and you're not borrowing a lot of money, you would most likely qualify for a variable rate mortgage. If you are very tight on your expenses and the amount of money that you make and the calculations are very tight, then a fixed rate mortgage would be easier for you to qualify for. There is another product as well the variable rate mortgages do have the option that if you thought that interest rates were going to start moving up and you want to lock in the current fixed rates to your mortgage, that is, convert your variable rate mortgage to a fixed rate, that option is available to you. Variable rate mortgages generally have got a lower or no penalty for paying them out early. So once again, if you are in a situation where you have some uncertainty as to when you want to pay out your mortgage, but you maybe have some money coming in, or you may need to move at a certain point, but again, you don't know the exact date, a variable rate mortgage does have lower fees or lower penalties, I should say, for breaking it early, and that may be one of the best options for you. If you would like to discuss whether a variable rate or fixed rate mortgage is appropriate for your individual situation. Feel free to give me a call, Danny Kroll, 416-893-8983, or you can visit my website at preferredmortgages.ca, and you can fill in the contact form there. And as I mentioned, you can give me a call anytime. I do work really hard for my clients, make the whole process very easy, and I've got some excellent products that I would like to be able to share with my clients. So thank you for tuning in, and check out my other videos. Have a great day.